What is up and good afternoon, everybody. Pete DiCarlo here, and today we're going to talk about Tesla. I'm going to go over the overall market today as well because it has been very fun out there in the markets. We've seen a pretty significant pullback across all the indices, but today I want to talk about Tesla. Most of the time on this main channel of ours, we normally just talk about long-term investing, company deep dives, how to read balance sheets, income statements, all of those cool things. But today I wanted to do something a little different. I do have a secondary channel called Traders Helping Traders, which the link will be down below, or you can just find us on YouTube, where I go over technical analysis daily. I go over trading options daily, and I go over really positions that I'm planning to take. But in this video, and specifically on this channel, I want to go over a position I took today on Tesla. I want to go over where do I see Tesla not only going in the next couple of weeks and maybe even months to potentially the next year. I want to go over some insane flow, which we're going to talk about that, and I'll explain what that is, as well as some dark pools and some other important things and some important price levels for Tesla, because it is such a popular stock, not only amongst newer to intermediate traders and investors in general, but it's just a popular company. So guys, hit the like button, subscribe to this channel. Let's get into it. So Tesla has not really had a great year, to be quite honest. If you look at January 2021, the very beginning, we were trading right up here around $892 to $900. Since then, it took a significant fade from $900 all the way down to $585, which is about a 35% fade. Now, even though we did shave off a massive amount of gains in market cap for the company, if you look from November of 2019 to January, which is basically almost 2 years, the stock was up 1,517%. And even now, since October 2019, the stock is still up 1,000%. Now, there are a lot of integral and key points to this play that I took. One of them is this 200-day SMA. Now, for those of you who are not traders and you're long-term investors, an SMA is one of my favorite indicators, and it's not like one of those algorithmic type of like something like a Fibonacci where it's sacred math. It's literally just the average price in a 200-day period. So if you see this gold line, it just means that the average price of Tesla in the past 200 days is $581. And it does tend to act as a very, very strong support and a very, very strong resistance. Now, Tesla, because essentially over the past year, it's just gone completely straight up and acted pretty parabolic. You're not going to see it as much, but on something like an Apple, basically, except for during the pandemic and whatnot, basically Apple normally, and most bigger companies normally, tend to bounce off of these 200-day SMAs, and they tend to be very strong supports. Now, it's not like because of the 200-day SMA that something fundamentally changes with the company. It's just not really a law of attraction, but more of a self-fulfilling prophecy that when it hits a 200-day SMA, it's an industry standard. People usually start buying. So one of the things you can see is that we have bounced here before at 568, and now we're at the 200-day SMA. And you can see right here where I posted this, I've been putting little tags on my my charts. Big calls came in yesterday for some 515, 590s. Now, the thing is, and we'll talk about black box in a moment, but when it comes to some 514, 590s, do you think that that was a day trade or a swing trade that came in yesterday, right? Just think about it for one moment. Day trade or swing trade? It was a day trade, right? Or maybe they held it overnight. But if somebody is buying heavy, or if big money is buying heavy for a 514, which was 1 day, that's today, so it was 1 day before expiration, they're not expecting the stock to go up in the past next couple of months or next couple of years. Right now they're expecting it to go up in like the next couple of minutes or next couple of days at max. So overall, that was not of much help, but I did go ahead and tag it on my charts on TradingView just as a sense that, okay, as soon as we hit the 200-day SMA, we had a good amount of buying that was coming in. Now today, this is the flow that I was really watching. The 6/16/2023 $1,000 call. So overall, Tesla's at a very, very strong support. It's been selling off massively. It's bounced before. Now it's the 200-day SMA, and we get this massive amount of flow. Now, something I want you to see is if we go back, right, and this is Black Box Stocks. I'll put the link down below if you guys want to check it out. But if we go back and we look at Tesla, and this is why just using a program like Blackbox or Cheddar Flow or any of these things, it doesn't matter if you don't really know what you're doing with it. This is the flow from today for Tesla. Now, if you take a look at this, right, like there's so much information here that you have to really know what you're watching, because if you're just seeing like put, call, that's not what's important. What I'm looking for are some very, very specific flows that hit certain requirements of mine. And one of the major things that I noticed was right here at 303 was these right here. So if I click on them, it will isolate the flow. So when I'm looking at a flow and I'm looking at big money buying and selling, because one thing you have to realize, guys and girls, big money does not want your average investor to know what they're doing. They just don't. They hide it through dark pools. They hide it through this type of stuff, which we'll talk about in a moment. Hiding it through different orders and different times so that you don't notice it all at one time. Because imagine what kind of stuff this would trigger if one order came in for $15 million worth of calls in a single minute, right? It would trigger a ton of algos to go off, and which would therefore give up what their position is. But something to notice is the time. So basically within 45 minutes, we got these orders. Now this is the same exact strike, 6/16/2023. I'm sorry, same date, 6/16/2023. So it's not like it's a popular strike. A popular expiration date. It's not like, this is a 5/21 or this is a June, 18th. This is specifically 2 years from now to this date. It's not a popular date. So that's number one. All of the money that has come into this is within 45 minutes. And on top of that, it's for this date that's like 2 years away. All for the same strike, $1,000 strike. That's another thing that's unusual to me. It's all sweeps, which means they want to get into these positions as soon as possible. The other thing is they're averaging up into the position. So look, you can see the first ones came in at $113 a contract. Then they paid $114 a contract. Then they paid $117 a contract. Then they paid $117 a contract. Then they paid $117.78 a contract. Then they paid $119 a contract. So they're averaging up into a position. Now think to yourself, what does averaging up into a position usually mean to you? If you're averaging up into a position and you're paying more for it multiple times within a single trading day, what are you expecting? You're expecting the stock to go up. You wouldn't be averaging down. You're averaging up. You're very, very bullish. And look at the amount of money that's coming to these. $2.27 million, $2.3 million 2 minutes later. Let's see, a half hour later, 1.79 million. Okay, 2 minutes later, 982,000. 1 minute later, 1.32 million. 10 minutes later, 1.31 million. So this is just one order, and I would lead to believe after my 7 years of doing this, this is one person. So what they did is, instead of, like I said, putting $15 million worth of these calls out on the market and buying into those calls, what they did was they went ahead and they entered it all within a certain amount of time in different orders, hoping that nobody would notice it. But because we're on top of our game, we noticed it. And this is something that is very, very unusual. So when you have Tesla with a ton of calls coming in today, with good bullish flow, with a beautiful bounce off of major support. Now, one thing that is bearish is this descending triangle, but I think that we should see Tesla at least back up at 680 in the next couple of weeks. And then from there, I think we should be able to see if we can break back up to 800 and then potentially up to 920. However, I wouldn't be surprised if we hit 680, reject, and start taking a fade, because this person, right, who's buying out to here, they might just be looking for this 12% move to the upside. So I will do an update video when I get out of this position, but this is the position that I took. So I took a screenshot from my private academy. If you do want to be a part of my private academy, it is only $10 your first month. You can use the link down below. It'll bring you to this page. $10 for your first month. Use the code Academy90. You get access to every single trade I take live. As soon as I take it, you get the live stream with me and my mentees every morning for the first hour of market open. You also get access to our 60-hour course library and the private Discord. That is a screenshot that I took from the private Discord. I just filled 3 minutes ago. So I'm shooting this video. It's like 4 p.m. Eastern Standard Time. Market just closed. I don't know when this video is going to be out, sometime tonight. But I did a put credit spread for 585 and 580. If you don't understand what a put credit spread is, go to YouTube, which you're here already, and then just type in on YouTube, put credit spread Peter DiCarlo, and I'll remember to link the video down below too. Then just click this one, monthly income put credit spread. It's a great video explaining to you guys how put credit spreads work, but a put credit spread is bullish. It's bullish, trust me. So It's really good. Now, as far as this position is considered, and we'll explain how to set it up, as long as Tesla closes on this date, which the date is 6/18, so as long as Tesla closes June 18th above the strike I sold, $600 or $585, as long as Tesla closes above $585 by June 18th, I will make $444. So not a massive return, but still not bad. So essentially, as long as Tesla doesn't die, I'll make money. Even if Tesla could sit here like this for the next month and a half, and I would end up making $444. However, if it closes below 585, I will lose about 900 bucks. Now, put credit spreads are a great way to trade this. The other thing you could do is just grab shares. So grab some shares and, start selling around that price point, in my opinion, about 680 bucks in the next couple of weeks. Or you could just buy calls. The thing I don't like about calls is you don't have theta on your side. The theta is against you. So for me, I like to have theta on my side. I like to, allow the decay to happen to the person who is purchasing my purchasing my puts. So this way I can make some cash off of them. Go check out that video on put credit spreads. I'll keep you guys posted on this trade, on this play. Let me know if there's any other stocks you want me to cover. And I'm going to be putting out a lot of content. I am going to Texas, so I'm actually going to Texas tomorrow, and I will be there for 2 weeks, but I do have videos that are scheduled to go out on this channel and the second channel, and I might be doing some update videos from my computer, kind of like this, talking about the market overall and like what my opinions are. So thank you guys for all the support. Hit the like button, subscribe, and I'll see you guys next time. Peace.